A very good morning. Welcome to Power Breakfast. We are at the Mumbai News Centre. I'm Nigel D'Souza, and with me, Pavitra Parekh. Hey, Pavitra, good morning.
Hi, Nigel. A very good morning to you too. Let's kickstart the show by taking a look at all of our top headlines. Federal Reserve Chairman tempers rate cut expectations, also warns against policy bending to short-term political interests.
And Asian markets slip in early trade following a weak handover from Wall Street. Dow drops more than 170 points after Fed officials curb rate cut enthusiasm.
U.S. Secretary of State Mike Pompeo arrives in New Delhi for a 3-day visit. Sources say India is likely to raise issues like the import of Iranian crude, America's push to curb Huawei's presence, and the S-400 deal waiver.
So it has to do with what's called a related party transaction.
In an exclusive chat, Indigo CEO Ronojai Datta opens up on the difference between the airline's founders, says the differences are over related party transactions and different proposals for a resolution are being studied, adds that he does not think the promoters will part ways. Well, the Asian markets, they've opened up lower, mirroring a weak close that we saw on Wall Street. This comes after Fed Reserve Chairman Jerome Powell said that the United States Central Bank is assessing whether the current economic uncertainty calls for lower rates, but noted that the Fed will take a wait-and-see approach given how rapid the recent economic changes have been. So for starters, you have the Japanese Nikkei, that's under some pressure, that's down close to around 0.5%. The yen, well, it was moving towards the 107 odd mark. Today, in fact, it's trading at around 107.3 odd, so keep an eye out on the yen as well. The Kospi, a bit of a negative take just to kickstart trade, so that is down close to around 0.1%. Well, let's pull up the other couple of markets. Both the Straits as well as the Taiwanese index should come up for you. More or less flattish with a bit of a negative bias. What will all this mean for the SGX Nifty? Remember, yesterday we saw a good relief rally on the Nifty. For starters, though, the SGX Nifty is saying, well, we'll give back close to around 25 points of what we put on yesterday. But Fed Reserve Chairman Jerome Powell, in a speech at New York at the Council on Foreign Relations, emphasized the independence of central banks. Powell said that the Fed won't bend to political pressure. However, he noted that trade uncertainty and global growth worries could prompt rate cuts.
Fed is insulated from short-term political pressures, what is often referred to as our independence. Congress chose to insulate the Fed this way because it had seen the damage that often arises when policy bends to short-term political interests. Central banks in major democracies around the world have similar independence. Along with this independence comes the obligation to explain clearly what we're doing and why we're doing it, so that the public and their elected representatives in Congress can hold us accountable. Against the backdrop of heightened uncertainties, the baseline outlook of my FOMC colleagues, like that of many other forecasters, remains favorable, with unemployment remaining near historic lows. Inflation is expected to return to 2% over time, but at a somewhat slower pace than we foresaw earlier this year. However, the risks to this favorable baseline outlook appear to have grown. The question my colleagues and I are grappling with is whether these uncertainties will continue to weigh on the outlook and thus call for additional policy accommodation. Many FOMC participants judge that the case for somewhat more accommodative policy has strengthened. But we are also mindful that monetary policy should not overreact to any individual data point or short-term swing in sentiment. Doing so would risk adding even more uncertainty to the outlook. We will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion.
All right, so Jerome Powell there now saying that they will not bend to any kind of short-term political pressures. But it's not just the Fed chairman. The Fed's most dovish members, St. Louis Federal Reserve Bank President James Bullard, also said that a 50 bips rate cut in July would be too much. He said that it is time for an insurance cut, but the situation does not warrant a 50 basis point cut. All right, so let's now also bring up the U.S. markets and tell you how Wall Street fared yesterday. So major indices ended much lower yesterday. You can see the Dow declined the most after comments from top Federal Reserve official Jerome Powell and James Bullard. Now, this cooled investor optimism around a potential rate cut in July. So the Dow Jones closed over 180 points lower, notching its biggest one-day loss since the 31st of May. The S&P 500 lost around 1%, while the Nasdaq Composite also underperformed, ending 1.5% lower. CNBC's Leslie Picker now gets us a wrap of all of the action on Wall Street.
U.S. stocks finishing sharply lower as Federal Reserve officials curbed investor optimism around a potential interest rate cut next month. The Dow dropping 179 points, its worst trading day so far in June. The S&P falling 28 and the Nasdaq down 121. American consumer confidence hitting its lowest point in 2 years. The Conference Board's June reading snapped 3 consecutive months of increases, in large part due to the escalation in trade and tariff tensions. The index dropped to 121.5 last month, lower than the 131.1 level analysts expected. AbbVie is buying Botox maker Allergan for $63 billion. AbbVie is trying to reduce reliance on its arthritis medicine Humira, which faces the loss of patent protection in the U.S. Shares of AbbVie ended the day down 16%, while shares of Allergan soared 25%. And the U.S. Justice Department has opened an investigation into allegations that major U.S. poultry producers conspired to fix prices. The investigation heightens pressure on the producers, including Tyson Foods, Pilgrim's Pride, and Sanderson Farms, which have been fighting allegations as far back as 2008. Those 3 companies alone control almost half of the U.S. chicken market. Pilgrims and Sanderson both deny involvement in anti-competitive behavior. Tyson did not return requests for comment.
All right, thanks for taking us through all of those details, Leslie. But on that note now, let's also get in some opinion from Evan Brown of UBS on the Fed's rate trajectory and outlook of the U.S. economy following comments from Jerome Powell.
We've seen a full shift from the Fed to risk management mode, where in the average ahead of every recession, the Fed has been about 5%. They've got 2.5% of ammo. And the argument is, let's act really early to make sure that we're ahead of this. And because the worst thing that happens is you cut 250 basis points, you're back to zero, and everyone thinks you're behind the curve. What they're saying to us is that risk management point. It's that they really want to act fast and aggressively to kind of get the economy, making sure that it's stabilized and support the market. So, we don't think that they are restrictive right now, but providing a little bit more accommodation is not necessarily a bad thing with inflation low.
Well, turning attention to the European markets, they closed mostly lower amid the heightened geopolitical tensions between the United States and Iran, as well as the ongoing trade uncertainty. The UK market, though, that outperformed, managing to eke out some very, very minor gains in yesterday's trading session. Remember, year to date, you have both the CAC as well as the DAX. Both of them they have seen a gain of more than 15%, while in fact the FTSE, that's up only around 10% on the back of those Brexit concerns. But in yesterday's trading session, it was a relative outperformer for 2019. It's a relative underperformer in comparison to the other couple of indices.
All right, so that was all of the action from Europe. Let's also take a look at the currency space. The dollar recovers a tad after falling against most major currencies overnight. Now, meanwhile, the yen strengthened amid growing tensions between Iran and the United States, which have stoked some fresh safe haven buying.
An all-important world of commodities and crude oil prices edge higher after data showed a decline in U.S. crude stocks, but gains remain capped amid hopes for progress in the trade war talks between China and the United States during this week's G20 meeting. On that note, let's listen in to Dan Yergin of IHS Markit has to say on the US-Iran tensions, as well as the importance of the G20 meeting for the oil markets.
Iran, as you say, is a major producer that right now is not a major producer. It's barely a minor producer. And it's because if you look at what's happening to world demand, this year we see supply increasing by about 1.5 million barrels a day just from the United States, and demand has really decelerated, and it's only going to grow by about 1.1 million barrels a day. So that's what's kind of holding things steady while we see what seems to be a crisis and a breakdown in a system to deal with it. the most important meeting that's coming up is going to be the G20 for the oil market, not the OPEC meeting, because the question is there going to be a China-U.S. trade deal? And that, I think, will actually be more significant for oil prices right now. But obviously, if the tension increases, if there are further actions, you'll see an oil market that will start to react.
All right.
Welcome back. Then let's take a quick check on the Asian markets. Well, the overnight handover wasn't great. Now, in fact, the Fed chief is talking tough. He's saying maybe it'll be not so easy to get those rate cuts that the market was definitely anticipating in the Fed's next meeting. So on the back of that, you had the US markets that ended with a cut of around 150 points approximately. And this morning, Asian markets have opened up in the red. Almost all those indices are trading in the red. Barring the Kospi, that's seen a bit of a recovery from the low point of the day. But otherwise, the screen is red. And on the back of that, after putting on close to around 100 points yesterday, the SGX Nifty is saying, well, we'll be giving back close to around 20% of that. That's a 20-point downtick to start off today's trading session. Let's see whether or not that dip gets bought into, Pavitra.
Yes, absolutely. Let's see whether or not that dip gets bought into. But moving on right now, auditors across the country have been under fire. Now, amidst this backdrop, the government is working towards strengthening the framework for auditors to avoid potential conflicts of interest and ensure that they serve as gatekeepers to avoid frauds. Now, Timsi Jaipuria is here with the government's plan. Timsi, what are the proposals under this new consideration?
Well, that's right. What government sources are indicating is the fact that government is working towards further strengthening of the framework for auditors, and this time government is considering three options to strengthen the framework. Firstly, to completely ban the non-core businesses that are being provided by the auditor firms. Also, government is considering to see that the scope can be expanded in the prohibited list of roles that an auditors can provide under the Companies Act. Also, government is considering to cap the percentage of revenue that can be generated by providing non-core businesses by an auditors when it is compared to the revenue that auditors generate from providing core businesses. So government is very clear that the framework further needs to be strengthened, and the recent lapses by the auditors is due to the tick box compliance that these auditors were working towards, and that cannot continue in the due course of time. Also, on the recent lapses, government is very clear that government is not barring any particular network of auditors, and they want that the firms which are involved as per the company's rule, as per the penal provision under the Companies Act, is what government has given punishment on, and no disproportionate punishment has been given to auditors in the past given their role in the corporate frauds that has been identified. So government wants that auditors should continue to work in India, especially by becoming the gatekeepers to indicate and to further try and put forward red flag indicators when it comes to fraud. So auditors will continue to have a smooth sail, but yes, more strengthening of the framework is what government is working towards.
Well, let's get straight to the market action then. Back home on the Lal Street, the market ended in the green yesterday, with big buying was seen across large as well as mid caps. Remember, for the month of June, we have been relative underperformers. So the Nifty is sitting with a bit of a cut for the month of June. But yesterday, we were relative outperformers because the entire globe, be it the Asian markets, the European markets, and later in the day, even the US markets ended in the red. But we hit a century yesterday. The Nifty was up close to around 100 points. Sonia Shenoy joins us early this morning to fill us in with all the market cues. Hey Sonia, good morning.
Hi, good morning Nigel. Thanks a lot for that. Yes, the Nifty has been holding steady at that 11,650 mark. In fact, it's sort of found a bit of support at that level and has been bouncing back for a couple of days. This morning, though, the Asian markets are under pressure. The global cues have not been that good. The Dow is down almost 200 odd points. There is that all-important, Chinese Premier and Donald Trump meeting that will take place over the weekend. And in anticipation of that, there has been a bit of turmoil across the global markets. In fact, the Fed officials have also curbed the rate cut enthusiasm. So yesterday, Fed Chairperson Jerome Powell said that the Fed is still assessing whether a rate cut is called for or not. Now, there is a bit of risk aversion globally, and that has led to safe haven buying. So gold has hit a 6-year high, as we know. In our own markets, gold has almost hit that 35,000 rupee level because of, a slowing economy, heightened geopolitical tensions, etc. For our own markets, though, as I said, the Sensex and the Nifty have snapped their 2-day losing streak. The Nifty has been holding on to that support of 11,650, and yesterday there was buying both by FIIs and DIIs. So you had FIs buy about 1,160 odd crores in the cash markets, and DIIs bought about 377 odd crores. So it would be important to see if our market decouples from the rest of the global peers, because we also have that big budget which is less than 10 days away. So perhaps there's an anticipation that there could be some big announcements there, and that's what's keeping the markets afloat.
All right, thanks a lot for that, Sonia. But also tell us, what are the stocks that you will be watching out for today?
Well, there are a couple of stocks in the news. Godrej Properties is in the news as it aims to raise about 2,100 crores via the QIP route, a floor price of 928 rupees. NTPC has won a 40 megawatt solar capacity order out of the Uttar Pradesh 500 megawatt tender, the state tender that is. Sources say that DHFL has paid 150 crores out of the total 375 crore commercial paper that was due. So they've made a part payment, which I think would bring about some relief on the stock. Adani Power will acquire GMR's Chhattisgarh energy project. The resolution plan got the approval on the 24th of June. And Reliance Power, although it is a penny stock, it will be in focus once again, as ICRA has downgraded the long-term rating of Sasan Power, which is the 100% subsidiary of the company. Back to you.
Okay. Welcome back. Now, U.S. Secretary of State Mike Pompeo will be visiting India today to discuss the key issues with respect to trade as well as the rapport between the two nations. Parikshit Luthra is here to give us all of the details.
This is the first high-level engagement between India and the United States. Mike Pompeo, the US Secretary of State, will be meeting business leaders. He will be calling on the Prime Minister, holding a detailed discussion with his counterpart, Subramaniam Jaishankar, and will also meet the National Security Advisor, Ajit Doval, as well. Both Mike Pompeo and Subramaniam Jaishankar will address the press from India and the United States. There will be a significant amount of time spent on trade issues. Mike Pompeo is likely to express US concern about India's e-commerce policies, data localization and the trade deficit as well. And here Jaishankar is likely to allay those concerns and try and dispel some misconceptions that US companies and the US government may have as well. And also tell Mike Pompeo about some of the domestic compulsions with regard to trade. But there is also separate trade negotiation going on between the USTR and the Ministry of Commerce, which is the right forum for these discussions. No deliverables as such, no MOUs or agreements that would be signed, because this is just a meeting for the two leaders, Mike Pompeo and Subramaniam Jaishankar, to strike a working rapport. This is what our sources have told us. They're also saying that India is likely to urge the US government to allow Indian companies to continue importing Iranian oil, as this is important for our energy needs. We would also express concerns about US-Iran tension, as this is impacting the Chabahar project, also our oil routes, our air routes, and the Indian diaspora, which is in Iran in a big number. The S-400 deal is likely to be brought up by the US. They have reservations about this. They've expressed them publicly and in private, and India is going to convey that we fit the criteria for a waiver under CAATSA sanctions, and this was a deal that was agreed upon with Russia much before the sanctions came into effect. US has been pressing and pushing India and its allies not to partner with Huawei, and here Subramaniam Jaishankar is likely to tell Mike Pompeo that India would take a decision on Huawei based on its own economic, security and industrial interests. Expect a significant amount of time on terrorism, on Afghanistan and Pakistan as well. US would articulate its expectations from India in the region and the Indo-Pacific, and this meeting will set the tone for the meeting between Prime Minister Narendra Modi and Donald Trump on 28th in Osaka, Japan.
Well, moving on then, an RBI panel set up to look into the problems of the micro, small and medium enterprises has submitted its report. Now, the committee, which was headed by former SEBI chief UK Sinha, has recommended a 10,000 crore rupee government-sponsored fund. It has also suggested the creation of a 5,000 crore rupee distress asset fund to assist the stressed MSME units in clusters. Ritu Singh joins us with all the key highlights from that particular report.
There are 37 recommendations in total that the UK Sinha panel has made for the revival of the MSME sector and for their long-term economic and financial sustainability. The first, of course, is the definition of MSMEs itself, where it says that the government should categorize MSMEs on the basis of their turnover rather than the investment that they make. Secondly, it also says that the role of SIDBI should be enhanced and it should have a more focused engagement with state governments for the development of this sector. PSB loans in 59 minutes, that scheme which was launched by the government to enable easier access to credit to MSMEs. Under that, the panel recommends that the loan limit should be enhanced from 1 crore rupees to 5 crore rupees. Further, it says that the government should sponsor a fund of funds to the tune of 10,000 crore rupees to sponsor or to support any venture capital and private equity investments into the MSME sector. It also recommends the setting up of a 5,000 crore rupee distressed asset funds that would work in tandem with RBI and banks for the revival of stressed MSME accounts. It also says that there should be an exit policy for MSMEs under IBC, something that does not exist currently under the norms. And lastly, the revision in loan limits that are sanctioned under the Mudra scheme should be doubled from 10 lakh rupees to 20 lakh rupees. These are some of the key recommendations. Of course, there are many more. It needs to be seen which ones are finally adopted by the RBI.
All right, thanks for running
us.
On
to a big CNBC-TV18 exclusive then. Indigo CEO Ronojoy Datta has opened up on the difference between the airline's founders. Now, in an exclusive conversation with Shireen Ban, the Indigo CEO said that the promoters differed over related party transactions and were exploring different proposals for a resolution. He also added that he doesn't think that the Indigo promoters will part ways.
It's really a very, how do I say it, an administrative issue. It has no impact on the company, it has no impact on management, and fortunately for me, Mr. Damodaran is very sort of experienced and well versed in all these issues, and he's handling it on his own, and he's doing a great job. So we hope to resolve it soon. But look, there's always differences between promoters. It'd be hard to find a company and say, okay, you've got these 2-3 promoters, are there no differences? That'd be unusual, I would imagine. So this thing should be seen.
When you say administrative differences, I mean, what does that mean exactly?
You know what? We debated, do we need to go down the path and identify exactly what it is? Well, then it'll open up another can of worms. And what exactly is that? And what exactly is that?
No, but you're very specific. You're saying it is a difference. It is an administrative difference.
Yes.
What would an administrative difference be for an airline?
Well, it's not airline related.
Okay.
That's the important point.
Okay.
If it was, are you buying engines? Are you growing? Are you doing international? It's not an airline issue.
Okay.
It's an agreement issue between the two promoters.
Okay.
So it is an administrative matter between them.
Okay.
It's in the language of what they have agreed to. So it really has nothing to do with the airline.
Okay. So the current shareholder agreement ends in October. So obviously I would imagine that the resolution needs to be in place before that because this administrative difference, as you articulated, will perhaps need to be incorporated into the new shareholder agreement in some form or fashion.
So the shareholder agreement expires in October, but there's an article of association in place, and that continues. So we have not sort of gone any further than that. Let me go back and answer the question, actually. There's no reason to be so cagey about it. So the issue really is something, and it's going to be such a minutiae event, we'll say, really, but it is.
Okay, give it a shot.
Give it a shot. So it has to do with what's called a related party transaction.
Okay.
Let me explain that a little. So Interglobe buys or sells certain services to Indigo, the airline. As an example, the headquarters we are in, the landlord is really Interglobe.
Right.
So we pay a certain rent. The hotels, our crews stay overnight at various places. And when they stay in Chandigarh or Jaipur, Sheraton, Holiday Inn or Novotel would bid for those. Now Novotel, Interglobe has a shareholding in those. So these are called related party transactions.
Right.
And it's a matter of how you deal with them that the two promoters are talking about. Now, there's a very clear law on this, as Mr. Damodaran is fond of saying. Tata Steel sells steel to Tata Motors.
Yeah.
That's a related party transaction.
Yeah, you have to have an arm's length.
Arm's length. And we have all those in place. So the only issue they're talking about is, do we need to modify this related party transaction process in any meaningful way. And at some point it'll get resolved.
Is it from a compliance perspective, or
Not
do they want to change the terms?
So
and who wants to change the terms?
Well, clearly,
which one of the promoter wants the terms to be changed?
So clearly, Rahul Bhatia owns Interglobe.
Yes.
And he's the landlord of our property. He has shareholdings in Novotel. Rakesh Gangwal is the one who's saying, I want to take this related party transaction process and change it. Now, as it happens, it's perfectly, we are following compliance to the law. He'd like to add another layer over and above that, and they're discussing that issue.
Okay, so
and also let me tell you,
right,
the related party transactions, when you add them all up, last year they were $30 million, and this year they'll be going down to 20 million or less. And we are a company of fairly many billions of dollars. So it's a very small part of what we do.
All right, so the Indigo CEO there saying that he thinks that the promoters are unlikely to part ways, but he also spoke about how the Jet Airways demise has benefited the airline and how they will avoid the mistakes made by Jet. He also says that Indigo is still very much interested in Air India's overseas operations.
The routes are quite attractive, many of them. As I said, Jet's biggest strength was domestic Mumbai and then the Middle East. So as Dubai, Doha, all these become available, we are very anxious to get into those, and so we like those. But again, remember, we have 1,500 departures a day, right? So Jet domestically gave us 30 more departures in Mumbai. So it's not like a game changer. It's like 30 out of 1,300, great, nice to have. Similarly, international, we're getting another about 25, 30 departures a day. So these are small numbers in the scheme of things, but they're all very attractive routes.
Well, you know, we've got a new government in place. When in the first term they decided to put Air India up for disinvestment, you did express an interest in Air India, then didn't follow through with an expression of interest. You're more interested in the international operations of Air India. The government decided not to split. If they were to change the terms and come back now, we are given to understand in July with a new disinvestment plan for Air India, would you be interested?
Look, the history of mergers in the airline industry are not very great, right? I mean, Kingfisher bought Air Deccan, Jet bought Sahara. Neither of those turned out to be good investments. So we're not going to rush into this blindly. There are a lot of things that give us pause. There's the huge debt, thousands of crores sitting there. Buying aircraft at the right price is very important. Did they buy all the fleet at the right price, or will we be stuck with high-cost aircraft is an issue. So these are all things to look at. But at the same time, is it attractive to say, oh, they fly to Heathrow, they have slots there, you get more slots in Delhi and Mumbai, you get traffic rights to many cities, including the Middle East. Yeah, that's all very attractive. So I think there's some rewards, but there's a huge amount of risk. So again,
so would it be fair to say? Would it be fair to say that the only reason you would consider looking at Air India would be if the government were to split the domestic and the international operations?
Or if there was another buyer, hypothetically, who would say, I'm more interested in the domestic.
And you can take the international.
Then we could take the international. And these are speculative hypotheticals. There may not be such a buyer. But if you said, what is your key interest? It is clearly the international at the right price, with the right fleet, with a lot of caveats, international would be attractive.
Welcome back. Now, Deutsche Bank has come out with a report on BSE 500 companies' share pledges, and Nimesh Shah is here with all the details. Hi, Nimesh. Good morning.
Hi, good morning. So, this makes a bit of importance because of the SEBI board meet tomorrow, and there is a likelihood that SEBI is going to, enhance the regulatory framework with regards to the promoter pledge shares in Indian market. Now, it's an interesting, data which Deutsche Bank has compiled for the BSE 500 companies. For the quarter ended, the total number of companies within the BSE 500 which have promoter pledge share is 114. The total market value of those pledge shares is close to $28 billion. Now, within that, there are at least 34 companies where the promoter pledge shares is more than 20%. Well, this is all known, but the fact that there is a SEBI board meet tomorrow, this is very crucial and important data to watch out for. Within sectors, the Deutsche Bank report says the relatively higher promoter pledge shares are in sectors like industrials, materials, and utilities. Also, there are at least so the number of pledge shares going up vis-a-vis the pledge shares going down for Indian companies has also gone up in the last quarter. So there is this big talking point about promoter pledge shares and the kind of impact it's had on the market. This data will be very, very crucial, and the fact that there is a SEBI board meet which is going to enhance the regulatory framework. So watch out for these companies where the promoter holding is very high, and that's something which SEBI is going to take it very extensively in tomorrow's board meeting.
Okay, all right, Namesh, thanks so much for joining in and filling us in with all those details. But the other big stock in focus will be DHFL. They've delayed the payment of around 225 crore rupees on the outstanding bonds for the second time in a month. Abhishek's with us to run us through all those details. Hi Abhishek, good morning.
Good morning, Nigel. So DHFL has defaulted on its commercial papers dues which were, as of yesterday. So a total of 375 crore of dues were there for repayment, out of which they have made a payment of 150 crore or 40% of that total quantum. So there is a default in terms of the rupees 225 crore which the management or the company intends to pay over the next couple of days. Now, just to alert our viewers, this is the second time in a month that DHFL has defaulted, and credit rating agencies have downgraded the rating on the company to D or junk. So a company has also mentioned that they are in the process of selling down their loans, especially in the wholesale book, and they will honor and put up the commitment to all the obligations that they have on the liability side of the balance sheet. Back to you.
All right, thanks a lot for that, Abhishek. But another company that's in focus is ICICI Lombard. Now, that stock fell over 6% in yesterday's trade post-block deals. Abhishek, take us through the details.
Well, to begin with, Red Bloom Investment have sold about 3.15% stake in ICICI Lombard at a price of close to 1100 per share. So Red Bloom Investment is a wholly owned company by Warburg Pincus. So Society General has picked up about 0.65% in ICICI Lombard when the stake sale from Warburg Pincus was happening. Remember that CNBC-TV18 had broken this story on 29th of May. Back to you.
Okay, all right, Abhishek.
Thanks so
markets early this morning, the Shanghai and the Hang Seng, they would have opened up. And in fact, yesterday they did see some selling, and today as well they've opened up in the red. So no real bounce back is what we're seeing on those markets. The Nikkei, by the way, that's moved lower. That's sitting with a cut of close to 0.5%. And Asia is in a tizzy actually this morning. All the Asian markets are trading in the red. The Kospi is the relative outperformer because that is more or less flattish. The SGX Nifty, though, is suggesting we'll give back some part of what we put on in yesterday's trading session. So maybe a 15-20 point downtick is what we could brace ourselves for. But what spooked the markets overnight? Well, Federal Reserve Chairman Jerome Powell, in a speech in New York at the Council of Foreign Relations, emphasized the independence of the central banks. Powell said that the Fed won't bend to political pressure. However, he noted that trade uncertainty and global growth worries could prompt rate cuts.
Fed is insulated from short-term political pressures, what is often referred to as our independence. Congress chose to insulate the Fed this way because it had seen the damage that often arises when policy bends to short-term political interests. Central banks in major democracies around the world have similar independence. Along with this independence comes the obligation to explain clearly what we're doing and why we're doing it, so that the public and their elected representatives in Congress can hold us accountable. The question my colleagues and I are grappling with is whether these uncertainties will continue to weigh on the outlook and thus call for additional policy accommodation. Many FOMC participants judge that the case for somewhat more accommodative policy has strengthened. But we are also mindful that monetary policy should not overreact to any individual data point or short-term swing in sentiment. Doing so would risk adding even more uncertainty to the outlook. We will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion.
The Fed chairman emphasizing the independence of the central bank, saying that they will not bend to any political pressures. But shifting focus now to the commodity space, we have Manisha Gupta joining in with an update. Hi Manisha, good morning.
Morning, and thank you. Well, that's exactly what the markets are watching out now, especially the commodity markets, which are all dollar denominated. And post the Jerome Powell statements, we have seen the US dollar index come off its 3-month lows. Remember, we were trading below 96, but after the statements that one, of course, about the autonomy of the US Fed, and the other that the July rate cut is not a done deal, is what the markets are really looking at right now. So you have seen the gold prices come off its highs. The strength, though, has come back in case of the metal prices, where we are looking at latest reports suggesting that there are deficits in metals like copper, zinc, and nickel. And there are supply concerns, especially with copper, where we are looking at the Chile-Codelco strike continuing now for a second straight week. That clearly seems to be supporting the prices. In crude as well, yesterday was a strong day and Asia has started on a positive note. The US and Iran concerns continue. Markets also will watch out for the G20 summit, which begins on the weekend. The expectation that the trade dispute between US and China is on its way to be sorted has been a big positive as well. And add to that, the U.S. weekly inventory data, which the API suggests may see a decline by more than 7 million barrels, is something that really seems to be adding premium to prices. So very strong crude prices is what we have seen in the last 24 hours come back again.
Okay, all right. Thanks so much for that, Manisha. Well, let's hop across to Mangalam. He's joining in to tell us what's going on in the derivatives market. Hey, Mangalam, good morning.
Good morning, Nigel. So we snapped a two-day losing streak yesterday on the Nifty, so ended very close to that 11,800 mark. Intraday crossed that as well, and that was led by a fair amount of purchase in the cash markets by both the FIIs as well as the domestic institutional investors. The FIIs bought about 1,150 crores, which is the largest that we've seen in at least the month of June, and perhaps one of the larger numbers that we've seen ever since the election results as well. More importantly, in the expiry week, the FIIs, they sold about 1,100 crores in index futures yesterday, and a large part of that was on account of unwinding of long positions as we bounced from the lows, as well as addition of some short positions. So let's see where we go over the next couple of trading sessions. If index options are something to be believed out there, there was some optimism built in. Long puts were unwound and long calls were added. However, not too much in terms of volumes out there. We have the range for the next couple of days in terms of maximum open interest at the lower end. 11,700 seems like a firm support now after we've bounced back from that level in the last couple of trading sessions. At the same time, 12,000 on the upper end looks like a distant dream right now, at least for the next two trading sessions. We saw some writing at the 11,700 put, 11.5 lakh shares added out there, and also 11,800 put. So that's telling you the bulls believe that this is a mark they can defend. At the higher end, maybe the 20-day moving average of 11,850 kicks in, and that is where we face a bit of a hurdle. So let's see where we go from there. In terms of stocks, watch out for Reliance Infra. That's the one that comes out of FNO ban in expiry week.
All right, thanks for taking us through all of those cues, Mangalam. With that, it's a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants for day 3 of the week.
My first pick is Allahabad Bank, buy with a stop of 39 for targets of 46. Syndicate Bank, buy with a stop of 38 for targets of 43. Indigo, buy with a stop of 1590 for targets of 1675. And DCB, buy with a stop of 236 for targets of 268.
I have a sell call on Equitas futures, stop loss 123.60 and target 115.60. The next one is a sell call on KSCL futures, stop loss 477 and target on the downside at 447.50. The third one, however, is on the long side, and that is Tata Power, stop loss 65 and target 69.40. The last one is also on the long side, and that is V-Guard, stop loss 232.80 and target 248.
My first pick is Godrej Industries. I buy it with a day target of 498 and a stop loss of 475. Second, DCB Bank. I buy it with a day target of 247 and a stop loss of 230. Third, SAIL. I buy it with a day target of 54 and a stop loss of 45. Last, Dredging Corporation. I buy it with a day target of 421 and a stop loss of 390.